Good morning, everybody. Mike Vacchi, Princetontrader, here with your Wednesday morning pre-market webcast. Okay, so yesterday we talked about the impact of the bears being unable to take out the weekly pivot early in the week. And typically what that means is it gets established Monday, Tuesday. The weekly pivot wants to be support. You do higher lows, and you end up making new all-time highs. That's what we did yesterday. It's what we've done this morning. We've made another all-time high at 79.5 just about 20 minutes ago. They retested that about 5 minutes ago. It's about 10 minutes to 9 Eastern time as I'm taping this. So the takeaway is when the bears fail to capitalize on their best opportunity to establish not even dominance over the tape, but just mere presence, okay? Just a seat at the table. Part of the conversation that early in the week, when the market is trading like this, when it just gets done doing an upper band ride, as you can see here, and we're just pulling back a little bit, everybody's looking to Monday. You know, here's Monday. Everybody, you got a little pullback. Everybody's looking to Monday, saying, what's it going to do? Well, what it did was it tested weekly pivot and it held, and now that takes it right back up. The dip buyers come in and say, okay, they're going to let us do it again. Let's do it. And there you have new highs. Today's a Fed day, so whether this propels us higher or whether this causes us to reverse or whether the market isn't going to care, I have no idea, and neither does anybody else. So don't let anybody out there in the Twitterverse convince you otherwise. What you need to do coming into 2 o'clock is identify price, identify the upper part of the range, lower part of the range, and then determine, are we making lower highs, higher lows? We're going to break out or break down, and then you kind of trade from there. You don't game it. You don't walk in at 159 and say, well, you know what? I read Barron's this weekend, and that guy in Barron's said that the market's going to do A, and, you know, my amateur economics degree tells me that, you know, I think A is probably going to work. So I tell you what, we're going to bet it all on black at 158 in the afternoon, and we'll see just what Janet wants to do here. Because if you do that, one of two things is going to happen. If you're right, you're going to be like, whoa, I'm right. Okay, take off that trade. Take it off. Yay, look what I did, and you'll tell all your friends, and it'll be great. If you're wrong, you won't get out of it. Because the premise for the trade is based upon your personal opinion about the market, and people don't like to get proved wrong, especially traders that do stuff like that. So you'll hold it, and you will be the squeeze. Or you will be the last person long that gets left, you know, holding the bag. Don't be that person. It's not worth it. Identify price, identify the range, risk, and what is price doing relative to the relative to the range, rather, and then do it that way. That's the way we do it in the room. It's the way we've always done it in the room, and we've done it with a lot of success. I'm not sure how much I'm going to do between now and the Fed. I was short last night, made a couple handles. They stopped me out. I re-entered, and I ended up taking it off for 2 handles. So I made 2, and they took 2 back. So if the bears can't convert 5-minute mid-band and some other key areas, VWAP's down at 76. If the bears can't convert these areas, hourly mid-band is going to be important, then chances are these dips get bought. We do a slow bleed up into 2 o'clock, and we'll see where we are. If those areas get converted, then being short is a discussable point. That may be all it is, but at least it's on the table. Okay? The reason I got short last night is because they were trying to convert those areas. But they couldn't do better than 72. And like I said, you know, there's really 2 markets today. There's the market before 2 o'clock and the market after 2 o'clock. We'll have to see how it wants to react. But, you know, protect your account, respect risk, stop shorting it just because it's going up. That's not a reason to get shorted. You don't get short all-time highs. You get short lower highs, but you don't get short all-time highs. You look for pullbacks off all-time highs, and then you buy them because they usually have more all-time highs behind them. But trying to top tick this market, the reason we keep making all-time highs is because people trying to keep trying to top tick this market, and they keep being very wrong. All right, everybody have a good one. I'll be out with a midday update on Twitter and Instagram. Trade 'em well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.